Want to be sure you're getting the most out of your retirement for all the years of your retirement? That's the primary goal of More Living with Jim Brogan and our Dollars and Cents segment, where we provide you with an important financial tip that will help positively impact the quality of your life in retirement. And now here's Jim with this week's Dollars and Cents tip.
Let's talk about inflation. Everybody's talking about inflation. And with good reason. I mean, oil prices, particularly oil, food, and clothing, are so up. And, what do things really look like in the short term and the long term with inflation? And what does it mean for you and me as we save our money and invest our money and as we draw from our life savings in retirement? I would be careful. It always scares me when 80% of the economists, financial analysts, all those people that you hear on TV, when 80% of them, 90% of them are saying something and they're all in agreement, or at least most of them are, starts to really scare me a little bit, because usually they end up being wrong. So, what does that mean with inflation? I think it means we need to be cautious. I think inflation, if we look at it long term, I think it's a real challenge for us. There's no question, because of the money that we have printed. That's called quantitative easing. You'll see that phrase in the press. That's where the government prints more money to buy U.S. treasuries. They're basically just flooding money into circulation. Eventually, you would think that that's going to come back to bite us, and things are going to cost a lot more because there's a whole lot more money out there. But, when you look at other challenges economically, there's still a lot of concern that prices could continue to come down. The real estate industry has not seen its bottom. But I just would say not so fast with the inflation because countries all over the world are still having debt problems. Golly bum, we know about that right here in the United States as we deleverage away from debt, or as we try to, and other countries in the world try to. That could mean prices actually start going down again. So, don't be so fast to think that interest rates particularly are going to climb. Most people think that if inflation goes up, interest rates go up. That's not necessarily true. I mean, that usually happens that way, but not always. We could have a period in our future where inflation goes up pretty dramatically and interest rates stay very low. And I actually think that's somewhat likely to happen over the next 10 years. But I'm not so sure that rampant inflation is right around the corner. And I definitely don't think interest rates are going to start climbing precipitously in the near future. So just be careful whenever everybody's talking about, inflation is upon us, when it's 80% of the people, starts to make me nervous, because usually there's going to be something to happen that's going to correct itself somehow. And we're already seeing signs of oil prices coming down, food prices, commodities, all those things. We're seeing those prices come down. Now, what does this mean for you and me with our life savings and our income in retirement? Because of the instability of the markets, with these inflationary concerns long term, and because of the aging of our population and the challenges with Medicare and Social Security, and because of our federal debt and the debt ceiling and the deficit issues, I just see a lot of volatility in the capital markets. And that means you've got to know how to invest your money to handle that volatility. Best way to make a lot of money is to not lose a lot of money. There's ways you can invest your money at risk in stocks and mutual funds, but have more diversity, where hopefully if the stock market, has a lot of volatility, that doesn't mean your portfolio has to have a lot of volatility. You've got to have a lot of diversity.
And that's our Dollars and Cents segment for this week. You can find this week's Dollars and Cents segment and others by visiting BroganFinancial.com.